Financials are more than just reports. They're the gatekeeper between your business and its license. Today on Approved AF, Erica joins us to demystify financial statements, breaking down net worth requirements and sharing real-world examples of how sloppy numbers can derail an approval. If you're serious about staying licensed and scaling with confidence, this episode you can't afford to miss. Let's jump in. Hey, Erica.
Hi, Catalina.
All right, so jumping right into it, let's start at the beginning. When we say financials, what exactly are we referring to in this context, and how are they used in licensing and compliance?
So a company's financial statements will comprise of three different statements. It will be the profit and loss statement, which is also referred to as the income statement. That will show just your company's income for the time period, as well as any expenses that were occurred during the time frame. And then as well as a balance sheet. The balance sheet has the assets and the liabilities on it for the company. So that's usually a rolling balance of your cash on hand and things like that. And then the statement of cash flows is typically required as well. More and more states have been requiring the statement of cash flows to be included in the financial statements. So if you are used to uploading your financial statements with just the P&L and the balance sheet, a lot of times you will get a system deficiency for that statement of cash flows because states are starting to look for just that statement that shows how much cash you made from operations, investing, and financing.
That's awesome. That's a good note to keep in mind. What are the core financial documents that every broker should be prepared to produce from the initial startup?
From initial startup, typically they only request a balance sheet. They really only want to see how much cash you have on hand and assets, just to see and make sure that you have that starting balance to get your company rolling. From that balance sheet, at the end of the year, they will be requesting the balance sheet as well as the profit and loss statement for that time period, just to kind of show how your business did in that time frame, and then the statement of cash flows as well.
How early in the company's life should financial organizations start tracking and monitoring and having a balance sheet? And what is the risk of waiting too long?
Everything should be tracked from inception, just from the get-go. So, cash in the company name, any bank accounts, equipment, properties, things like that are in the company name. Keep track of those on the balance sheet, in QuickBooks, in whatever accounting software. Even if you just have an Excel sheet that you're kind of updating along the way, there are tons of templates on Excel. But you need to keep track of this running balance, because otherwise by the end of the year when they request this information, a lot of times you've forgotten about that property out in Wisconsin and the extra bank account that you have with Bank of America and so many other things that you have to have included on that balance sheet. So just to make sure that all of your financials are always together and as accurate as possible, you just want to make sure that you're updating them as often as you can.
Can you walk us through some of the most requested types of financials in the licensing world? Audited, unaudited, and kind of what that all means?
Yeah. So there are actually 4 different classifications of financial statements. There are just plain unaudited financials, which will be the ones that you just export straight from your accounting system. They don't even have to be signed by an officer. It's just an unaudited, essentially, guesstimate statement of the company's accounts and how they did. The unaudited but compiled financial statement will have an outside CPA element to it. They aren't quite audited yet, so it's not a full audit of your company and accounts. But what the CPA does is compile all of the accounts together just to make sure that everything's being included and all of the accounts are being added to the financial statements. One step above that is CPA reviewed. So the compiled statements don't actually have the public accountant actually review the information, but the reviewed financials do. So in the review, they're reviewed for accuracy, but there's no full audit done for best practices, moving forward, how to proceed, things like that. Both the compiled financials and the reviewed statements will have a cover letter that states from the CPA firm with the stamp and the signature at the bottom and everything stating, my name is Joe Blow, and I have, compiled the following financial statements, or I have reviewed the following financial statements, or whatever, classification was done. Now, the full audit is going to be obviously more expensive. They're going to be more thorough, and they're way more time consuming. So depending on the license type that you have, you may require audited financials, in which case it's better to get a jump start on that audit as soon as you can after the fiscal year ends. Because like I said, a lot of times it can take 3-4 months to get these statements together, depending on how much they need to go through an audit.
So audits are not quick and they're not cheap.
Well, not at all.
When we see the term net worth, what does that mean?
So your company's net worth is going to be the equity that's found on the balance sheet. A lot of people mistake it for the net income, and it's not the net income. The net worth of your company is actually what your company is worth. Your net income is just what your company made outside of paying all your bills. So your net income is calculated, or your what is it? Your net worth is calculated by taking your company assets and then subtracting your company liabilities. So, for example, if I had a company and I had $30,000 in my company bank account, but I had $12,000. No, I can't do that. That's way too much.
Go round numbers, 30 and 10.
If I have $30,000 in my company bank account, but I have $15,000 that I owe on my company credit card, after I take that $15,000 away from my assets, I'm only left with $15,000 in equity. So the equity is calculated by taking your assets and subtracting your liabilities. A lot of times people come to us with balance sheets that don't balance. So I know it's a shocker, but a balance sheet is called a balance sheet because it's supposed to balance. So if you take your assets and subtract the liabilities, that's how you get your equity. If anything doesn't add up, you need to go back and check your accounts to make sure to see what's missing or to make sure that your equity is being calculated correctly.
What makes each of these different types of like audited, unaudited financial statements important, and how do brokers know what's required for their state or for their relationship with the applications?
Yeah. So obviously, if we start at the bottom with unaudited, those are free to print off from your accounting software if you have them. Like I said, there are plenty of Excel spreadsheets, templates, things like that, just to kind of give you an idea of accounts and stuff that you need to be included in your financial statements. So those are just bottom of the barrel, easy peasy to basically just thrown together. The one step above is going to be compiled. So that's going to be the next step. Those are going to be, obviously, you need the independent CPA so that there does come a cost with that. But it won't be as much as the higher steps. So as you go higher along the ladder rungs, it gets a little bit obviously more expensive because the audit is at the tippy top and that's the most expensive. So we have unaudited, compiled, reviewed is going to be more expensive than the compiled, but not as much as a full audit because they are reviewing the accounts. They just aren't auditing them. So compiled, review, and then audited. So when you have your full list of states, whichever one is the highest classification required out of all of the states. So if I hold Florida, Texas, and Georgia, and one of my licenses requires an audited financial statement, but the other one only requires a reviewed financial statement, I still have to submit audited financial statements in order to encompass all of those requirements. So I can submit one rung above what is required. So if the reviewed was required, I could submit the compiled. But since the audited is required for the other state, I can't submit the compiled for the audit. I have to submit the audited. So the audit does wipe out all of the ones below it. Same with if you have, a license that doesn't require audited financials, but another one requires reviewed, then you have to get all of your financials reviewed and then get those submitted just to stay in compliance with whichever state requires the highest classification. How you know which classification you need, how much money you need, all of that fun stuff is in the NMLS Resource Center. They have a section just on financial statements, and they actually have a handy dandy license requirements and fees chart, is what they call it. And you can go through, they have every single state and every single license. So you can go through, I usually highlight them for whichever company licenses they have. And then I filter through just to see which ones, require which classification. And it's basically a chart saying, if you have the California finance lender law license, then you need $250,000 net worth and you require audited financials. There is a breakdown for the financial requirement upon application. So there are a lot of states that require like audited financials when you apply, but then as the years go on, you only need reviewed financials every year after that. So they do break that down within the chart, but I will say there are still stipulations within these. For example, the California CFL example I just used, if you're lending, if your business activities are lending, then you need the $250,000 net worth. But if you're only brokering, you only need $50,000. So it doesn't stipulate that on the chart. If you ever are not sure, you can always ask us and we can look it up. It's available on the NMLS state checklists. So if you really want to dive deep into the statutes and really get your reading on, you can go in there and find, the actual, all of the breakdown, and some of them are just really thorough on how they like to break down these requirements. So the table is really just used as, an overall suggestion, but I do recommend looking into each of your license checklists just to make sure.
And like Erica said, if you have any trouble locating that information or you just want some guidance through that, give us a call at Licensing Store and we will outline your project for you and outline those requirements for you so that you're aware before heading into a project. Because even before starting this episode, Erica wanted to pull up some resources from the NMLS. What did you say, Erica?
The new NMLS is so freaking hard to navigate. I can't find anything on here. It took me 20 minutes to find this financial statement resource.
And she's in this all the time. So if you're not used to the NMLS, don't bother. Give us a call.
Yes.
You have helped hundreds and hundreds of companies navigate applications, renewals, and things of that nature. Any real world examples where missing or having inaccurate financials has delayed the licensing approvals or renewals?
Yeah, absolutely. That financial statements are one of the key components that regulators are looking at when they're looking at your license applications. So if your financial statements, like I said, don't balance, or if something is a little bit off, your net worth is not high enough, anything like that, that is immediately flagged. It's not something that you can just submit as a financial statement and kind of get, skate by. It does get flagged immediately, so it is required that you maintain the net worth the entire time that whatever net worth is required, you maintain that during the duration that you have that license and things like that. It also comes into play during renewals. So if you have any deficiencies for your financial statements not being audited, or the classification not being high enough, or your net worth not being high enough, anything like that, those deficiencies do affect your license renewals. So if you can't get that net worth high enough, they may not renew that license, and they do have the authority to revoke it. There have been instances where we have to reach out to the states and kind of reason with them about, there were some stock changes in the company, but they had the net worth by February. They just dipped below in January. A lot of times the states just require a sworn, oath of some sort, for lack of a better term, stating this is why we dip below the net worth. This is what policies we've put into place to make sure that it won't happen again. And we're sorry, basically. So there are some states that, are more forgiving than others. There are other states that will just revoke the license and ask you to pay to reapply. So that's why it's so important just to maintain your financial statements, make sure that they're as accurate as possible. That way, by the end of the year, you can get, if you need a CPA involved, you can get the CPA involved. You don't have to waste a bunch of time getting documents together, figuring out your accounts, adding in all those credit card bills that accumulated over the year, whatever it may be, as long as you're maintaining it throughout the year. Or if you can't, get a super easy peasy accounting software. They're pretty cheap. They're really user friendly. QuickBooks is pretty dummy proof. So I use QuickBooks for personal finances. So it's like there are things out there that have the ability to generate these reports. So if you can't do it by yourself and you don't have the time to sit down and do it, I recommend looking into some of those softwares and just for some help on the back end. But yes, there have been many instances where lack of financial statements or incorrect financial statements have affected people's licenses, their renewals, all the way up to revocation.
And if you do run into a state situation where they are able to kind of give you some leeway to get that net worth back up and they take that sworn oath, that is kind of a one and done deal. Most states are not going to give you a second chance once you dip below it again.
Correct. Yeah. If you do get the second chance in the first place, that's pretty rare, honestly. If usually we write the letter and they just kind of say too bad, so sad. But there are some states that sometimes the regulators having a good day, whatever it may be. Maybe they're a little slow and they're feeling a little nice. Sometimes they let it slide. But they do have the power to clear those financial statement deficiencies. So if if you can get the state regulator to give you kind of a one-off, pat on the back, you tried, buddy, do it again. When they'll go in, manually delete the deficiencies, but then the next year they won't do that again for you. They'll just see that, hey, this is the second year that you haven't been able to maintain the net worth. We made an exception for you last year. Maybe lending in California isn't good for you and your company is essentially what they're going to tell you.
Mm-hmm. What are the most common mistakes that you see companies make with their financials?
I think a lot of times people don't realize that their fiscal year end is not the end of the year. When people basically sign up to create their company, when they get their EIN and everything, you get to choose your fiscal year end. 9 times out of 10, people choose 12/31. It's just the end of the year. Makes sense. We have some people that choose 6/30 just because it's the nice halfway point. We have some people that chose 12/23 just because that was the day it was that they signed up. So it really just, you get to choose what your fiscal year end is, but once you choose it, you're married to it. So that is the date that all of your financial statements have to be as of. So if you were the person that chose 12/23 as your fiscal year end, then you have to have all of your financial statements to be from 12/24, 2024 to 12/23 of 2025. And that is your new fiscal year. So then all of your financials and everything have to be for that year rather than from 1/1 to 12/31. So it's really important that you go and double check your company's fiscal year end on your formation documents just to make sure that you are getting those financials. It's also on the NMLS. So if you need to double check that is very important because you cannot just submit financials willy-nilly for any time frame that you had a good net worth for. So like I said, they do check the dates, they do check the net worth and things like that. But another common mistake that companies make with the financials is not paying attention to the highest form of classification that they need from the CPA. So we do have some clients that needed the financials to be reviewed. They found a CPA that could compile them, but they had a license deficiency because they only have compiled financials and they need reviewed ones in order to keep their license. So that's another thing to keep an eye out for, is just to remember that there are levels to the classifications and you can't, CPA compiled is not going to satisfy the requirement of CPA reviewed.
Is there any benefit on how you look at things for someone to pick a fiscal year end of 6/30?
Yeah.
Versus 12/31?
Personally, I don't see any reason why this isn't going to be nice. I don't know why your company fiscal year end wouldn't be 12/31. Some people have it for tax purposes for their corporations, maybe. I don't really know.
Hmm. And then you mentioned you personally use QuickBooks, but are there any other tools or systems that you would recommend to help people keep things organized?
I I personally like QuickBooks just because it's more user friendly and it's pretty overarching. Like I said, I use it for personal financials, but it's very easy to move into company financials and things like that. But there are the accounting systems out there that are specific to mortgage companies. I don't have any firsthand experience in these, but I do know that they are more set up for mortgage companies and common accounts that mortgage companies would have so that you don't have to start basically from square one, creating your own accounts and going from there, where you can go into a mortgage accounting software that already has most of the accounts. You could add in whatever needs to be added, and then you don't have to spend so much time thinking of buckets.
Hmm. Can you share a scenario where financial documentation wasn't taken seriously and it ended up creating a bigger problem for somebody?
Yeah. A lot of times corporations don't keep track of their stock information, and it does change sometimes. So it is something that we have to keep an eye on, especially with Secretary of State reports. Some of them require that we report your stock information if anything has changed. So like I said, specifically corporations, the NMLS does look into these financials more. So when the equity is a little bit off, or if there's some questionable accounts, it's immediately flagged, and the regulators do reach out and request a written explanation. We've also ran into scenarios where regulators are requesting a written explanation for haircut accounts that are a little bit too high and things like that. So, um, a lot of people do submit their their financials just kind of thinking that they look over the totals and move along, but they do look into the individual accounts and the numbers and things like that. They also started assessing the percentage of other assets in comparison to like mortgage related assets, so that they made it harder for you to include intangible assets as assets for your company in order for you to make your net worth higher. Um, so they are monitoring, what you're counting as an asset and what tangible items you're counting as an asset. There are some states that have the high net worth that actually require some written breakdown in your financials of each asset and how much it is and what it is and things like that, just so that they know for sure that you are essentially proving that your company does have those assets. Just because there have been instances, so many instances of companies trying to inflate their net worth in order to get above the line, that they just can't get above.
Okay. As a broker starts expanding into more states or bringing on additional loan officers to their company, how should their financial documentation and strategy evolve?
As you move into more states, you just have to make sure that you're being even more deliberate and delicate with your essential financial data. So, as you move into more states, obviously more broker checks are being received. As you hire more employees, your account numbers are going to go higher just because now you are paying, 20 more loan officers. And so that account is going to have a higher number in it and your expenses are going to go up. So it's very important as you expand and as you're growing. All of those things are great, but you still have to monitor your net worth and your expenses just to make sure that, if your net income is negative, is the equity still okay? Things like that. You still need to make sure that you're maintaining the company equity while all of those things are also happening.
And what do successful brokerages do proactively that keep them in good standing with regulators and their partners?
Most of them are just very thorough with their financials, and they're very transparent. Obviously, if there's anything questionable on your financials, anything shady, if you try to put something in another account, they will find it and they will request explanation, further information, all the way up to proof of that, income or any of that. So more and more audits are involving financial statements. They're involving, loan origination systems, the broker checks that were received, things like that. So, and they are starting to actually look at the ratios of these numbers, the broker check received in, comparison to the amount of loans funded and things like that. So all of those numbers, as long as it's just like your loan origination system and it's just like your loan data, as long as you're keeping your data updated, when those regulators come to you and say, hey, you have $40,000 in other assets, what is that comprised of? You can open up your other assets account and say, I have $20,000 in horses and it's in a shed that is in the company's name. Whatever it may be, you can show them that you have those other assets. So it's just very important, like I said, to be very deliberate with your accounting, whether that be in the software, an Excel sheet, whatever. Just make sure it's very clean, concise, and it's thorough.
And don't be afraid to talk to a tax professional to ask them what you can legally do and not do and where to house those things appropriately in your network.
Well, especially with the net worth, a lot of times tax professionals can help you, move maybe your warehouse line can have a contra account, in the liabilities, but you can put it into the assets. Things like that we don't know a lot about, but that's what the CPAs are for. And that is their job, is to help you. Basically, if you tell them, hey, I only have $40,000 in net worth and I got to get this up to 50. Is there anything you can do? Are any of my accounts wrong? Can you look into this? So that's why it's also important to get that CPA relationship early on after your fiscal year end, because those financial statements are due within 90 days of your fiscal year end. So whatever date you picked as your year end, you got 90 days to make sure that your audit is done, your compilation is done, the review is done, whatever the CPA has to do. Or if you just got to log in and print off your financial statements that are in Excel, great. But you only have 90 days to do that. So it's really important to get that relationship with the CPA early, get them familiarized with your company, the accounts, all of that fun stuff, so that when the year ends, officially, you can slide them all the paperwork, they can get started. It's no different than having, your taxes done early. The year's done, all of that stuff is prepared. As long as all of your, income's recorded in your accounting software, all of the expenses are recorded and everything's accurate, you're good to go. Send it to the accountant and they can get the audit started. That way you're kind of first in line to them.
Yep. How can brokers reframe financial management as a growth tool and not just a boring back-end task?
I think financial management is, a lot of times people kind of see it as like a stressor, and you don't want to see, how many expenses the company's incurring, whatever. You just want to see the broker checks coming in and, all the green. You don't want to see any of the red. But at the end of the day, being familiar with your company and the expenses and things like that will make you more comfortable with incurring more expenses. If you are planning to expand into, more states or hire more people, being familiar with your company's financial standing and with, how your accounts are set up, or if you are even just comfortable with your accountant and you can say, hey, I want to hire 2 more loan officers to, Texas and Florida. What are we kind of looking at as far as like expense wise? So there are people out there that can help you with that. And that, rather than being a burden, it will give you that knowledge and just kind of empower you to, expand your company. We're doing great this quarter. We can do an employee party, getaway, whatever it may be. Or, hey, this has been a slow quarter. Let's get some employee incentives going. Things like that. It's just beneficial, especially as a company owner. It's always important to know your company's standing, especially in such a volatile market that we're in. You can't be so hell-bent on making the money that when the money's not coming in, you don't know what to do. That's why it's so important, especially as a company owner, just to be familiar with what's going on, what's in your accounts, and how the company's running overall.
Yeah, as a company owner, you need to be aware of those accounts and where your business is standing, and get familiarized with that, because you being blissfully unaware is not going to make for a long-standing company. Nizar always says, is a business owner, if you don't know your numbers, you don't know your business.
Yep. It's very, very, very important. Especially as in company decisions and stuff, you should always know your.
Yeah, if you're looking at expanding into other territories or jurisdictions, things like that, if you're looking at bringing on new people, into the company, you want to make sure that it's going to withstand.
Absolutely.
If you had to give one piece of financial advice to a mortgage company that was starting out or that was choosing to scale up, what would you tell them?
I would tell them to assess their financial situation, assess the states they want to go into, and then look at their financial requirements. So if you only have, $10,000 in the bank, that's a great starting point, fantastic. But you want to immediately go into a state that requires a $50,000 net worth, that's not really going to be attainable and it's going to be a waste of your time and that feat. If you go into an easier state that doesn't have a net worth requirement, you can build up that net worth in that state, and then that empowers you to expand to other states.
So just kind of having a stacking order for your expansion plans that kind of builds that momentum.
Yes, and usually people come to us with a handful of states that say, I have prospects in these states. I want these state licenses. If you come to us with those, we'll tell you that's great. For this state, you need this. For this state, you need this. And for that state, you need this. And then you can kind of go through and say, okay, I don't have the $50,000 net worth yet, but I think I can get up to the $25,000 net worth for that state. So let's go after that state first. I'll get a couple deals under my belt, and then we'll go on to the $50,000 state when I'm ready. So if you have a list or like an attack list or whatever it may be, just an order of prioritizations with that in mind, keeping that, yes, I want to make money, but I also need to understand the compliance guidelines and the financial requirements that are going to be asked of me.
Yeah. And just as a reminder, I know we've talked about it on previous episodes, but for those just tuning in, minimum net worth starts from the day that you apply in that state and continues on for the remainder of the lifetime that you're in that state. And so if you're in one state that has a $50,000 minimum net worth and a state that has a $250,000 net worth, the $250,000 minimum net worth will be the absolute bare minimum that you can hold, never dipping under, forever.
Yeah, that's a great point. And they do ask for bank statements. North Carolina actually asks for monthly statements from the entire previous year. So they want either an affidavit from your bank saying that you never went below $50,000 in, cash, or monthly bank statements proving that you never actually dipped below the net worth. So again, states find it. They will ask for proof. You can't get away with it. You can ask for forgiveness, maybe only once if you're lucky. So just make sure that if you are expanding into any of those states that have a high net worth, you really got to be married to that net worth.
So ask yourself, are you feeling lucky?
Yeah.
So I know this is like kind of a scary, topic, financials. No one really wants to like sit down and analyze it unless you're like, find that really enjoyable, in which case we love your brain type. It's just not mine. So, thank you, Erica, for making this, something that is digestible for someone like me to understand and kind of make it a little more interesting than just reading it off of the NMLS or listening to some boring old person tell me about it. Um, if I wanted to learn more, where can people go to learn more about, financials and what to expect to maintain and why they should do that?
Yeah. Like I said, the NMLS Resource Center has an entire subsection on financial statements. If you have any specific questions, you can always reach out to me. My phone number is 248-663-3094, and my email is just erica@licensingstore.com. So we'll always, feel free to reach out. We'll always help out with questions about financial statements if you're just kind of confused, or if you need, some CPAs in your area, we can help you find some of those as well. So any of that.
And we'll list all your contact information in the show notes just below the episode. So thank you, Erica, for being on today. We really appreciate it.
Thank you, Catalina.
All right, that's a wrap on today's episode. Big thanks to Erica for sharing her insights on financials and compliance. If you're ready to stop guessing and start building with clarity, Licensing Store can help you navigate your licensing from start to finish. Don't forget to like, subscribe, and share this episode so more brokers can build with confidence. Follow along on Instagram at approvedaf_licensing. And until next time, stay licensed, stay compliant, and stay approved AF.